All right, everyone, here we are with ticker symbol RKT, Rocket Companies Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. Before we jump into this chart, I want to say welcome to all my subscribers. Welcome back. And to all my first-time viewers and investors, welcome to my channel. Let's jump into this chart. So Rocket Companies, as I've stated in the previous videos, $18.30 is one of the most important points here. It was the lowest point reached in this stock's obviously last couple of months trend here in the chart, and the highest point reach is $34 and some change. So the bulls want to break through the highest point and the bears are trying to break through the lowest point. As long as this doesn't go below 1830, I don't see this hitting newer lows or newer levels of support, and until this breaks $34 and some change, this will start to see newer highs and newer resistance levels. But in this bearish run, it did not get anywhere near $18.30 something cents. Honestly, what it reached was $19.35. From that point forward, this actually started to level off, work its way up, and then it actually reached up here to $20. Now, this run was created because of some good news that they partner up with realtor.com, and I saw some other stuff that created this catalyst, and here we are now back in bearish territory. What does that mean for this stock? Are there really some bulls that are involved in this, or is this just a stock that is filled with uncertainty and filled with fear, making investors get out and not even want to participate as much as they could because of the fact that they get in and then they jump right out, get back in, leveled off, and this is the only day that I've seen this stock be pretty steady and not in upward or downward direction in the last couple of weeks, and quickly it's falling again. And here we are at 2174. What is going on with this stock? This stock supposedly has some great outlook for it, and it's in the real estate business and finance and leasing and so forth. I mean, what's going on with Rocket Companies? And then also their earnings was spectacular. I mean, when you look at that percentage of earnings, they beat it by literally 33.05, and the percentage was 2,300 more percent than the estimate. I mean, that was spectacular. I mean, I can only imagine how the next earnings is going to be. Even if it's not a surprise like this, it could be a good earnings estimate that we're going to estimate, right? The analysis are going to estimate, and then the company shows us a better number. I mean, I can only imagine that happening. Now, will this catalyst, now history does tend to repeat itself, will this catalyst start to form a month before earnings? That's the question. And start anywhere where it's at right now and run up to where it ran, or maybe even more, or run up and get slightly close to it. That is something that many investors should be asking themselves and looking based off the chart and what's going to happen for the next earnings. The next earnings is in December, so that's going to be interesting, and what is going on with the stock and what will be happening if they innovate and create some form of attractiveness to bring more investors in. But let's go ahead and move this to its new locations, the resistance levels and support levels. And our support from yesterday to today is an important one, 2143. If you want to write that down, if that gets crossed, this could be on its way down to newer lows, but we're going to use the lowest point of today as our support. Now, this is right now leveled off at 2174, and the 50-day moving average is up here at 2216. If that gets crossed, we're back in bullish territory, and the bulls can start to work their way up to newer highs. And yesterday's resistance level up here at 2270, 2269 will need to be crossed to hit newer highs. But before getting anywhere near all those numbers, the first thing that the bulls need to break through, and it does not signify that they've gained control, is breaking through 2182. Turn that into a support and continue to work their way up to newer highs and get as close as they can to the 50-day moving average until they cross it, right? Right now we're in bearish territory, and the bulls need to cross the 50-day moving average to get back into bullish territory. But right now, 2182 is the first resistance level that needs to be turned into a support so that the bulls can start to work their way up to newer highs. On the other spectrum, we have our support level that was formed by today, and that's 21.53. The bears are going to want to break through this. If this gets broken through, I really want to emphasize to every investor, pay very close attention to what's going on and how quickly this is moving to newer lows, because we're already in bearish territory, and by the bears breaking through 21.53, this is just confirming to hit newer lows and reach newer support levels. So keep that in mind. Super important how this stock behaves if 21.53 does get broken through, and pay close attention if the bulls are even trying to reappear, because this could work its way down to newer lows and the bulls can try to reappear and try to bring this one back up. But remember, we're still in bearish territory below the 50-day moving average, and the bulls need to break through this resistance level of 21.82. Thank you guys so much for watching. If you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell by turning on all notifications to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watched this video. And thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.